Okay, what is up, traders? What's up, tycoons? Super excited for today's video. In today's video, we're going to show you guys why price action is simply all you need to really get a good scalping strategy going. Scalping is something that's very popular, and scalping typically is a trade that's about, in my opinion, anywhere from 5 minutes up to 5 minutes up to 15 minutes. Now, this can vary, okay, but typically if I go past 15 minutes, it's starting to go towards an intraday trade rather than just a pure scalp. So we're going to look at the 5-minute chart and show you guys how price action truly is all you need sometimes, and you don't need to complicate your screen with so many different indicators, right? A lot of times beginners, what they'll do is they'll overwhelm themselves by using Bollinger Bands, by using MACD, by using stochastics, by using the RSI, by throwing in a bunch of EMAs and the VWAP. All right, in this video, you'll see that just simple price action sometimes is enough to do it, and how you can get multiple scalps in 1 day session of trading. So we're going to break down today's session in the market by looking at the S&P 500, the SPY ETF. And the reason that I'm showing you guys the SPY, and it is something that I highly recommend most people to trade, whether they're beginners or already experienced, is because it's one of the most liquid instruments there is in the market. Okay, so you're going to be able to get in and out of option contracts, of stock plays, whatever it is that you're trading. And if you're trading and you're looking to make big gains in a short amount of time, you can use 0 DTE 1 day to expiration contracts, to really capture that implied move that you're expecting and get in and out with a, sizable gain anywhere from 20 to 50, 60, 75% in just a matter of 5 to 15 minutes off simply a 0.25% move, not even a whole 1% move, not even a 0.5% move, but just small moves alone. If you get your timing right and you get your entries and your exits right, you can get some very nice profits. So what we have here is the 5-minute chart for the SPY ETF, and we're going to go over the different entries and exits that you could have had today simply by just looking at some price action. And we'll break down everything that's on the chart here so that you can understand. All you need to do is smash the like button and subscribe to the channel, and I'm going to go ahead and get straight into it. So initially, right, this is our market open right here. All right. And we are waiting for some structure, right? I never recommend somebody trading the first 10, 15 minutes of the market open, because it's going to be pretty much gambling at that point, right? The market really hasn't decided on which direction it's going to go. And a lot of times, the first candle is not always going to be the right direction, right? You see, we go up here, and let's say you go long off of this initial bullish candle, and then we take a dump, and you're trying to scalp and you're trying to get these close expiration contracts, whether it's 0 days to expiration, 1, 2, 3 days to expiration, anything below weekly, really, you're going to get burned, and you're going to get burned bad. So I definitely always recommend waiting for the market to give you some type of structure and let the plays come to you. You don't have to force anything. So the first one we get is we end up forming a nice little inverse head and shoulders here, okay, indicated by our left shoulder here, our head, and then our right shoulder over here. And we have our trend line that we're breaking. So you want to look for a break and retest of the trend line. So if you notice here, what we do is we initially break above and we get this large wick candle. And a lot of times people make the mistake of buying the first initial candle, and that's where people get trapped, right? They'll see it breaking out, they'll see it running up, and they'll end up buying up here, and things will pull back and it will force them out of their position. So you want to wait for a break and then a retest. And you see we come back below the trend line and we break out, okay? And you can enter here off of the nice strong body breakout, all right? And if you see, again, this is the 5-minute chart. So this is 5 minutes of a candle right here, 10 minutes right here, 15 minutes. And with scalping, like I said, you're looking for typically anywhere from 5 to 15 minutes to get in and out of your trades for a true scalp. All right, off the breakout, once we broke that trend line here and up to the highs, that was a 0.23% move. And you would have been able to get anywhere from 20 to about 50% on your option contracts, just depending on which expiration date you're choosing and what strike you're choosing as well. Okay. And you see things start to reverse afterwards, right? But what your goal is for quick profits, right? So off of the initial 5 minutes or the initial 10 minutes, you can already take your profit and get out of the play. Or what you can do is set a tight trailing stop loss or a tight stop loss on your play. So that way, if things start to reverse, you'll get stopped out in profit. But if things continue to go upwards, you can capture more profit than you initially averaged or anticipated, right? So that play was a success. All right. Now, I didn't capture all of these trades. I do mostly scalping in the Discord. So a lot of time it's really hard to post the entries and exits on my scalps because, I'll enter a scalp and, 1 minute later, the play is already up 20%. And then, it could go back down to break even and people will chase. And sometimes, they might buy something at a top and not be, looking to close the play, right? Like if I post a scalp entry here and someone sees it 6 minutes later and then they buy in right here and they don't sell within the next 5 minutes, they're not really going to capture that profit. And shortly afterwards, things fall down. Now over here, our next setup was a double bottom and we got a nice W pattern, right? So, here's our two bottoms right here that we established. We established a bottom here and we established a bottom here. And we're looking to see if we can get a W pattern off the double bottom, because sometimes you just get a small bounce and then you end up coming back downwards, okay? You can never really predict the movement off of a double bottom, but sometimes you can get a nice W setup. So what we did was we drew a trend line here. And once we broke through our trend line, you see we come back down, okay, because this is where the candlestick opened. So we wicked up above, we tested it, we pulled back, and then we broke back out. So once we broke our trend line, we can enter here. This is a 5-minute candle, okay? And then we have 5, 10, 15 minutes of green candles to the upside. We fulfill our W pattern, and you can go ahead and take profits here, or as I said, you can set a tight stop loss or a tight trailing stop loss and get into the play. Now we have a group of 3 lines right here. These are the major Fibonacci retracement levels, okay? These help you establish trend continuation versus trend reversal. So what I mean by that is nothing goes in a straight line up or in a straight line down. You get a move up, retracement, continuation higher, or a move down, retracement, continuation lower. Now, so what it'll do is it'll help you establish trend continuation. So what we did was we took our intraday swing low and connected it up here to our intraday swing high. So we had the move up, we moved down, we consolidate a little bit, but we're holding above our 61.8% retracement level, meaning that all of this move down and all of this consolidation is still healthy and we could still be in an uptrend, and we're going to look to see if we can get an uptrend move. So we had really 3 things on this play right here, okay, that gave us a possible entry just off of pure price action, right? Number 1 is we had the double bottom, okay? We had the bottom here, bottom here. Number 2, we're holding above our 61.8% retracement level. So now we have an idea that, hey, we're still in healthy retracement territory to continue going higher. And then number 3 is we get a test and then a true breakout of our trend line right here. And again, that leads to a nice scalp position where 5 to 15 minutes we're taking profit and we get nothing but green candles for the next 15 minutes. Right. Now over here, what we're doing is we're using the same retracement levels, because if you notice with trend continuation, you should retrace and then make a higher high, right? So you should make a high and then a higher high. Look at what we have here. We have a high and then we actually made a lower high. So we didn't get the follow through move that we were looking for. And now we've established some more price action, some more data in the day. And we see we have a nice trend line that we're starting to test multiple times after this pullback here, right? So we bounce over here, we're bouncing over here, we're bouncing over here, all right? And we pull back and we test this trend line and we know that we didn't make a higher high. So we're thinking to ourselves, hey, if we break this trend line, we could get a nice move to the downside. And we also may be heading for, ultimately a break of our 61.8% retracement level, because we didn't make a higher high. And there's a possibility we could be, not really continuing that bullish trend that we had initially that we were looking for to take us to this possible zone up here, which is our gap fill. All right. And the gap fill is obviously from this candle down to this candle. We came up and started to fill a little bit, but we didn't fill all of it. So the next entry and the next trade off today's price action was simply off of a retracement after the bearish, not even bearish confirmation, but just leaning towards more bearish, because we didn't get the retracement and continuation of the trend. Instead, we made a lower high. So now we're going to anticipate that we're going to continue making lower highs. All right. And so what we do is we take our swing high, connected down here to our swing low, and we're looking to see if we're going to reject and respect our major retracement levels, just like we did to the upside when we caught the bounce, all right, and looked for a pattern and a breakout. We got the breakout, we got the bounce, and things played out nicely there. So we're doing the same thing now to the short side, and we're looking to see if we're going to get an ABC structure, right? And this would be a pullback, a 1, 2, 3. Okay, so we get our wave 1 down. Your wave 2 or your B wave is typically going to coincide with your retracements. That's what we were looking for over here, was a 1, 2, 3 to the upside. So we went ahead and we drew up our Fibonacci retracement levels from the swing high to the swing low. We retraced and we get a very bearish candlestick just right above our 38.2% retracement level. And we know that we've tested this trend line multiple times throughout the day. And the more times you test any trend line or any level, the weaker it's going to get. And so what happens here is we break below. And remember, a lot of times you can get faked out off of that initial break below. So what you want to do is you want to look for a break and a retest. And that's what we get over here, right? We come back into our zone right here, and we see that the next candle opens up right above this trend line, and we've tested it multiple times and started to wick below. So that's a strong indication that not only did we reject our retracement levels for the downtrend continuation, okay, but we also made a lower low, right, where we had a low, and then this candle here made a lower low, and this looks like a clean retest for continuation, and we came down and hit the price targets that we were looking for. Now, you get the 1.0 extension is going to be your target for an ABC move. The 1.0 extension is going to be your C wave, your wave 3, and this is going to be the 1.0 extension of your A to B, right? So what you would do is you would come over here and you would take your extension tool, your fib extension tool, and you take the swing high, all right, down to your A wave, and then up here to your B wave. Okay, and you can see it gives us our levels right here that we got. And sure enough, the market respected it, price action respected it, and we got the ABC down, hitting those price targets ultimately before getting a bounce. So as you can see, we didn't have any special indicators on the screen. We didn't have VWAP on the screen. We weren't using the relative strength index. We weren't using stochastics, the Bollinger Band, a simple moving average, any of those. We're simply going off of the price candles, looking at the price action. Now, we did use the Fibonacci retracement levels, okay? But these are key in identifying trend continuations as well as trend reversals. And it's a really useful tool that you can help to establish some trading activity and some possible entries and exits. So hopefully you learned something new in this video. If you did, make sure to smash the like button, subscribe to the channel, and I'm out.